I'd go back to our earliest comments to the U.S. Trade Representative, Mr. Lighthizer, last summer, back in June of 17. And our observations then were that we agree we need to modernize and update NAFTA. It's 25 years old. The world has changed. Commerce has changed. We live in a digital world. So we need to update and modernize NAFTA and bring it into the 21st century, certainly. But our specific comments were that we needed to do it quickly. We needed to create a lot of certainty for the businesses and do it in a seamless way. But it needed to include all three parties, and it had to do no harm. And so I guess our observation there would be, this is the largest free trade zone in the world. We're talking about 500 million consumers, the three countries, very complex, very sophisticated, but highly efficient supply chains between and among the three countries. And so getting all three parties together is important. And this is a great first step. We're encouraged. So obviously better to have them talking to each other than talking about trade wars. So this is a good first step.
And Matt, I want to dig into that sort of notion about the supply chains just a little bit more. I mean, we certainly have these conversations about sort of the Asian supply chains and the impact of, tit-for-tat tariffs and the threats of those expanding there in China. But in terms of the integration from a retail perspective between the U.S., Mexico, and Canada, for that sector, what is the economic impact? Have you measured that in terms of the relationship between the three countries?
Yeah, there are 14 million jobs created in the United States because of the trade that's generated by the NAFTA agreement. So you got 14 million Americans who are employed because of the benefits of NAFTA in terms of creating those complex supply chains and lowering prices for consumers, creating opportunities for capital to be invested in the most efficient ways. And the potential for $16 billion in additional price increases on U.S. consumers if NAFTA goes away. So there are some benefits that are specific and unique to retail, and then there are the other benefits that are broadly spread across the economy because of the jobs created in other industries that benefit from NAFTA. And I think if you look, as you've been talking today about retail earnings and how healthy and strong they are going back to last week and 2 weeks ago, many conversations with retail executives talking about the overall health of the economy, the strength of consumers, the benefits of tax reform and regulatory reform from last year, which were really a down payment on what we're seeing this year. I think we have to look at this in toto and say that while there are unique benefits to the retail industry, there are also broader economic benefits that generate positive results for retailers because we're reflective of the overall health and strength of the economy. Right now, we're living in a very strong, healthy economy. Consumers are in a great place. The Conference Board noted consumer confidence the highest today since 2000. Very, very strong numbers. So let's keep the momentum going. And seeing the U.S. and Mexico come to some agreement gives us more momentum. And hopefully we get Canada to the table and we continue that. And I think we're set up for a very, very healthy 2018 for the rest of the year.
Speaking of that, Matt, I wanted to ask you, you mentioned the earnings that we've been talking about the last few weeks. I mean, we know this is the time where the holiday season actually gets set up in the chain. In terms of inventories or spending on e-commerce or anything else, how do you think the action that we're seeing now translates into what we will see come Black Friday?
Well, Carl, you know the way the timing of the inventory works. A lot of the inventory for the summer season was ordered a year ago. The inventory for this fall holiday season is already on container ships, and much of it's maybe already in the United States in warehouses and being distributed. So we know that in that regard, we're probably pulling ahead some of the activity that occurs, actually consumer transactions later in the fall, but retailers and their supply partners have been working on this for more than a year. So I think when we talk about potential tariffs on China, for example, things like that, even what's happening with Canada, Mexico, and the U.S., that's not likely to have a huge impact on the supply chains for this year. It might have an impact on consumer confidence and consumer psyche, one way or the other. For example, we know last year, tax reform got done right before the holidays. The benefits of tax reform in a practical way aren't being felt until now, maybe even until later this year and next year. But consumer confidence and the holiday season were very strong last year because people felt good about the economy. And I think similarly with regard to what happens with Canada, the U.S. and Mexico, or even with Europe and China, if we feel like there's positive momentum, we know as consumers, as shoppers, as voters, we all know we feel better about the way things are, even if the real benefits aren't going to impact us until somewhere down the road.